G'day. This is a general video, but a video for everyone to have a quick look, but just to help the DIY crowd at how to use their data. I'm looking here at, I've tried to find some simpler trades where there's a lot of hedging going on. It's very difficult to work out what's happening. So here I've looked at the SQQQ, and I've also looked at the SH, which is the Pro. It's the S&P 500 Pro shares short. Anyway, so we're just having a look. We've got a couple of buy signals here that have happened at different times when the 4 signals that we put into a little formula drop out and give us some buy signals, and then we've had a look at what the results were with the size of the trade. This is an interesting group of traders who use these trades. Again, it's probably got something to do with the way that 401 accounts allow people to trade, and that these people are very in the know. Anyway, that's one of our secret pieces of information that we use. Here we can see about the 17th, we see the trading increase here. It's been sitting quite low. We had this one buy signal here on the 12th. We've had quite low numbers here of calls. I'm looking quite a low delta here. I've got it down at 28. But they do trade quite low here. There's obviously some reasonable volume in there, and it's gone through to the end of the month. And look, the end of the month trade is a big trade. I'd probably have a look a little bit further out, less into the end of the month, because there is a lot of delta hedging going on there, but a little bit further out here in this 0.5, 0.6 delta. And you can see they've got in, there's a little bit of a pause. Some of them have just traded the 2 days, and then there's nothing for a few days, and then it's sort of started up again. It hasn't been a huge trade, but you can see here it's gone from however many positions long to quite strong positions long, and then they've got out on the 10th. And if we just have a look at that in price, here's the 16th is the buy call, the 17th. So they've traded these 2 days. Some people have stayed till the end of the month, bit risky. These people have been happy to go home halfway through the week. They've made their trade. They know it's going to become more volatile, but they're not quite certain when. Then they've had a few days off, back in on about the 26th. You can see them starting to come back in here, 26, 27, and they've traded it out. There's a little bit of a bump there, and they've traded through to about the 10th. And if we just look at that on the price, that they've come in here, 26th, 27th, and they've traded through to about the 10th. Not a great trade, but you know they're high gamma in the money, so they're getting full value for their trade. Short dated calls are going to give you the biggest gamma result. And then you can see also, again, this is a little bit amplified. We are just redoing our filters at the moment. We're adding some more filters day by day up to 10 and 12 days, and then week by week up until a month, and then every fortnight up until 2 months, just to try and get out some of this noise, so we just don't roll into that next bit of noise. Obviously, you're always going to have a bit of noise on the interface of OPEX, but if you have next week's dropping in single days, this will just be much more gradual. Anyway, we can see here that when these trades have finished, we've got out here on the 10th, we've got out here on the 10th, and sorry, we've got out here on the 10th, and here we can see this has been shorted quite heavily. There's a couple of bursts of shorts, and then they've got out, and the trading's moved over, and we can just see that in the number of positions. Yes, look, the filters do make it a lot easier to use. That's why we work with linear matrix, and that's why we filter them by delta and not by strike. Too hard to work. Anyway, so that was the ultra short, and then this I just was highlighting it to make it a little bit easier to see. Again, there's too much noise over here in the puts, but here in the calls, again, we can see there's 2 days of calls here that's been heavily traded. Again, 17th, 18th. Some people have traded this in the S&P, some in the Qs for different reasons. If we look at this final trade here coming in on the most recent trade being Friday, it's really been shorted and it's being shorted in the Qs, and we've had this very large increase in the Qs coming in. Again, we see this little dip in the trade, but pretty well they've stuck it through till here, and then they've got out at the end of the month. You probably could get out a little bit earlier, but the Friday is always a good day in shorting. You know, you're going to be high volatility into OPEX. It's a bit like trading the VIX upside down. In our daily note, we get a very good read on the VIX. You would have noticed the VIX the last 2 days we've been saying was going orange to green. We knew we had an event happening here. We didn't know how big it was going to be. A lot of the time the VIX going into the FOMAC weekend, we get a lot of hedging and we don't see any resultant price discovery. But this tells us, when we go and look at these high leveraged products, that we're going to get some volatility in price, and not just in hedging for people being worried. So there you go. I hope that adds to the way you use DIY. Oh, here you go. This was just me drawing some silly lines on. My silly lines were how well the buy signal works. And look, they're varying buy signals, but all of those buy signals have been very pertinent to being able to use this data. And this is where I think we should be trading. Thanks for your time. Cheers.